Hi everyone, welcome to the Board While Waiting show where I share my journey towards a 3.5 million US dollar stock portfolio. In today's episode, I'll talk about 4 strategies you can react with when one of your position falls significantly. Now, I made this video in response to one of you viewers who actually wrote in to me to my Twitter account asking me for advice on how I deal with days like this when a stock crashes. And I really like it when I get viewers who are also working professionals like me. So this viewer, he said that he's actually a network engineer. He's very young, in his 20s, and he came across my video and he subscribed because I want to show you that with a 9-to-5 job, it is possible to really invest for your future and get financial freedom, even though you're just an employee, as long as you keep to the discipline of investing for the long term. So on to the main topic, which is AXON, that fell dramatically just yesterday from a price of 700 all the way down to 580. So in a single day, I lost 13,000 US dollars on this single position, which to many people like us, with a day job, this could be 1 month or 2 months salary, right? So that's a pretty big deal if you think in those terms. And if you take a look at the bigger picture, I lost a total of over $15,000 in a day, and my portfolio dipped by about 4%, largely because of AXON. So how did I react to this, and what am I planning to do in response to this drop in AXON? Let me share with you 4 strategies on how you should best react when any of your long-term holdings fall significantly. The first strategy is to be a little sick in the mind. Yes, you heard me right. Let me explain. So I live in Singapore. So while AXON was dipping 16% in the span of 6 hours yesterday, I was fast asleep due to the time difference. And when I woke up in the morning, the market was closed, and I saw the price had gapped down from 700 to 580. Do you know what my first reaction was inside of me when I opened my broker account and discovered there was a mini crash? Yes, I was happy as fuck, guys. You know why? Because it's time to top up. And this is what it means to be contrarian. If we want to be better than the market, then we have to react differently from the market when shit hits the fan. So while others are scared as fuck, we need to be emotionally the opposite and be greedy as fuck. And I want all of you to train yourself psychologically to keep looking forward to such dips until the day you can wake up like me in the morning and actually drool as your first reaction when this happens. Now, this psychological strategy aside, there is, of course, a second part to the equation we need to tackle when dips like this happen. And that is to check whether any fundamentals has changed that caused the dip. Because although most dips of a strong business are benign dips, there are on some occasions changes that really affect its fundamentals. So sometimes we can't get carried away with martingale mindset of doubling down on losers. And the way that I personally do this is usually to immediately Google the company's name and then just add the words market news at the back and just go through the top few articles to get a sense of what's happening with the stock price. What I found was that one of the analysts from North Coast Research Company downgraded its ratings of AXON from buy to neutral and cited a fallout of AXON with one of its partners, Flock. Now, in their report, they stated that the end of AXON's partnership with Flock could mean that it might become more expensive for AXON to operate. And the reason stated is that Flock provides automated license plate reader, which is ALPR for short, data to AXON via Fusus. Now, Fusus is AXON's command center OS system. So in summary, the report is saying that Flock may charge AXON higher prices for its car plate reading data because of this falling out, right? So AXON's going to get charged higher prices from Flock because maybe Flock is pissed, right? And so the analyst feels that this would affect AXON's margins. Now, when I read this report, the first reaction I had was that the timing does not make sense. Because as early as January 31st, 20 days ago, AXON had already made the decision to end the partnership. So why should the market only factor this only now, just because an analyst says so 20 days later? And if you read their report, the real reason, in my opinion, is that this research company had concerns of Axon's lofty valuations. So it's very typical for people to come up with all sorts of reasonings, even if something happened a few weeks ago, just to justify their downgrade, when the real reason deep down is because they are just simply afraid that the valuation is becoming more expensive. So this becomes a sort of self-fulfilling prophecy when an analyst downgrades and feeds a short-term narrative like this, causing the stock to go down. One other thing I found was that when I went to the Flock safety website, they released a statement about the end of this partnership. And let me read it to you. And the title here firstly reads, Axon plans to sever APIs with Flock. Now, when you read this title, the first question I want to ask you is, in this ending of the partnership, who, based on the language, is in control? It's obviously Axon, because the title says, and this is on Flock's website, not Axon's website. Flock themselves, who is the one getting cut off, says Axon plans to cut API access to Flock. So it's not Flock cutting API access to Axon, it's the other way around. Now just hold on to that thought in your mind for a while, and I'll explain why this is important shortly. And the next part of their statement says, I am disappointed, which is the Flock spokesperson. They say that I'm disappointed to share that Axon made a surprise decision to end our partnership and cut off the API access that law enforcement depends on. Axon decided that being open and collaborative is no longer in Axon's best interests, and no additional reason was given to us. And then, number 2, Axon will no longer support new mutual customers starting July 24th, 2025. They may continue to support existing customers, but it's unclear to what degree. And then, number 3, we as in Flock, will continue to try to get Axon back to supporting an open ecosystem. Now, let me tell you my takeaway from Flock's official statement. Firstly, this statement tells me that Axon is the kingpin of the law enforcement partner ecosystem. It is the central platform where all other vendors like Flock Safety connect to Axon, much like how every app in the world wants to list on the Apple iOS ecosystem. And that is why some people call Axon the Apple of the law enforcement industry. And if you watch my previous video about investing within your circle of competence, this is when I really flex my industry knowledge. Because I happen to work in one of the largest software app ecosystem companies in the world, and believe it or not, I also happen to work in the partnerships team, so I have an idea of how this all works. And so here's a secret I want to share with you about platforms like Axon or Apple. Every platform in the world has an end game of eventually cutting off select vendors, third-party vendors like Flock. But they will never say this out in the open because it will stop new partners from onboarding onto their ecosystem to build new apps and to feed new data into the platform ecosystem. And let me give you an example. In the early years of Apple, there used to be a third-party app called the Moment app on the iPhone. I don't know if any of you guys remember, but this app was a way that you can track how much screen time you spent on the iPhone. And it gave you a way to discipline yourself better and reduce the screen time you were spending on the iPhone screen when needed. Now, does that sound familiar? Yes, because Apple then launched in iOS 12, shortly after this Moments app was created by a third party, right? Apple themselves launched iOS 12, and in it, they created their own app called Screen Time, which I'm sure many of you use it. I use it myself. Right? And what happened to the Moment app? Of course, it closed down because Apple now is taking it in-house. There's even a term for this in the Apple ecosystem. They call it Sherlocking. So at this point, you might have a few questions. Why would platform owners like Axon or Apple allow third-party vendors to build apps or connect to their ecosystem in the first place? Why? The reason is because, yes, it's free labor. These third-party vendors are building on Apple or Axon's ecosystem for free. And the platforms can leverage, by the platforms I mean Apple or Axon, they can leverage these free apps or connected systems to fill short-term market needs without footing a single cent. It's free. Because there are only so many developers or employees that Apple or Axon has themselves to build this stuff. So this is a short-term free solution. And when the time comes, and Apple and Exxon obviously have data as the main big brother platform, right? They can then make case-by-case decisions to determine which apps they should take in-house because they have enough data to justify the demand in a way to justify the in-house development. And I can tell you with certainty, working in the partnerships team of a software company myself, right, one of the largest ecosystems, I won't say which company I work for, that this is the eventual end goal of every large ecosystem platform in the world. And they will never tell you this secret, but it is the truth. And so going back to Exxon, we know that they have their own in-house Fleet 3 system that does automated license plate reading, right, which is ARPR for short, similar to one of the major services that Flock Safety provides. Now, Exxon has not released an official statement as far as I can find. I can't find anything. So we'll have to wait for earnings in a few days to see if Rick Smith has any comments and addresses this. But I can assure you, from my understanding of how partnership ecosystem works, I am 100% certain that this decision by Exxon was not taken lightly, and it was planned, and it was a long time coming since their very first few days of partnerships with Flock 5 years ago in 2020. Exxon must have decided to Sherlock Flock because they feel like in-house development of ARPR with Exxon's own Fleet 3 system has better profitability than relying on Flock as a third-party system. And to add, Flock Safety is one of many partners that connect to the Exxon ecosystem. So I feel this analysis by North Coast Research Company is just an overplayed narrative. Now, that being said, I am looking forward to this earnings call because depending on how Rick Smith makes a statement about this, it could be a yellow flag in terms of management character because you don't want to create this impression and culture that you, Exxon, aka Exxon, can be an asshole and just leave your future partners in the lurch because then no new partners would want to build for free in your ecosystem. And when that happens, how can you keep this free labor flywheel going? So this is something I'll be watching out for in a few days in earnings statement on how and why Exxon has been doing this and how they're going to address this to allay any fears of future partners. Now, the third strategy I want you to have is to remember that this should be a long-term thesis. Now, remember that I only bought into Exxon just 1 year ago. And obviously, it's double in time, that's great. But remember that I mentioned that it could double and it could come back down crashing and I lose the entire doubling and it does not matter. I have zero emotional damage, right? Because as long as the fundamentals remain intact, stocks are always volatile. You just have to detach yourself emotionally and play that long game. So my long-term thesis, based on my fundamental understanding of this short-term impact, has not changed. Because remember that the 10-year and beyond long-term thesis on Exxon is its 77 billion target on the total addressable market, as well as its early penetration internationally. So the last strategy I want you to have, number 4, is to have your buy rules way in advance before shit hits the fan. So in this way, when days like this happen, you can deploy capital mechanically and ignore any short-term fears you may have if you can't have strategy number 1, which is to have a sick mind like me. Personally, for me, the amount of pessimism in Exxon at the temporary moment as I look at the market open right now, as I'm making this video on the 20th of February, is already fantastic and to my liking, this pessimism. It already fulfills my all-time high dip rule for Exxon, and on the price to sales ratio, it's already come down tremendously to a level that I'm pleased with in having and buying into this price for such a high growth stock. So what have I done? As I'm presenting this to you, I have literally just keyed into my broker and bought 7.6k USD worth of Exxon stock at a price of 549, which is 23% down from its all-time high of 716. This is not financial advice, guys. This is just me, but I'm just telling you that I feed on pessimism, especially on strong companies with strong long-term fundamentals that are unchanged. Now, one thing to bear in mind is that earnings is coming in a few days' time. So depending on how Rick Smith responds, like what I mentioned earlier on, maybe the stock goes down even further. And so your first question might be thinking, hey, why not just wait, right? Why don't you just wait for earnings? My logic is very simple. You can never catch the bottom. Don't be greedy in that sense, right? You can be greedy, but don't be greedy like this. You have to be comfortable at the price that you're willing to pay today. because you feel like it's already at your predetermined buy level from strategy number 3 that I just mentioned. So if the stock falls even more on earnings day in a few days' time, so be it. We're in this for 10 years. So even though I don't catch the bottom, I'm okay with today's prices and the level of pessimism as it is. And I believe that the fundamentals will work the stock back up over the next few months or 1 to 2 years, whatever it is. Nobody can predict the future. So the tens of dollars in the price differential I'm getting by not catching the bottom will be insignificant in the long run. But as it is right now, the price is great enough for me. Okay, so on a side note, if earnings does in fact result in the stock going lower, I am ready to average down some more shares. And that is the level of my conviction in this company and my adherence to the long term. So I hope you enjoyed this episode today, folks. Until next time.